IPOs in India have always attracted a lot of investors. For example, the recent IPO of Happiest Mind has gained 111% on its first day. It means if you had invested in the IPO of Happiest Mind, then you would be sitting on the profit of 111% on the first day. Likewise, Camcon Specialty Chemical was launched at a premium of 115% on the first day. Rossari Biotech was launched at a premium of 57% on the first day. And Route Mobile was listed at 104% premium on the first day of its listing. Now there is another IPO in the market. It is the IPO of Burger King India. I am sure many of you would be aware of this brand Burger King. It is famous for its burgers, especially the Whopper burger. Now the question is, as an investor, should you invest in the IPO of Burger King or not? Hello everyone, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. In this video, we are going to investigate Burger King India and we are going to decide whether it is worth applying for the IPO of Burger King India or not. So I have divided this analysis in 5 parts. We'll first start with the key facts regarding Burger King India. Then we are going to discuss about the QSR market in India, that is the quick service restaurant and its future growth prospect. Then we are going to do the competitive analysis of Burger King. Then we are going to do the financial analysis and analyze the future growth prospect of Burger King in India. And finally, we are going to conclude whether it is worth investing in Burger King India or not. So Burger King India is the master franchisee of American company Burger King. And what is master franchisee? It means that Burger King India has got the exclusive right to operate Burger King restaurants in India. Burger King India launched its first restaurant in November 2014. Till date, Burger King has got 258 company-owned restaurants and 9 sub-franchisees restaurants of Burger King all over India. Company has launched an IPO of rupees 810 crore. Out of this, rupees 450 crore is from the issue of shares and rupees 350 crore is offer for sale. It means that out of this 810 crore of IPO, rupees 450 crore would be utilized in the company to grow its business and pay off its debt. And the remaining 350 crore is basically the worth of equity being sold by its promoters. So this money would directly go to the promoters. The IPO is priced at a band of rupees 59 to 60 and you can purchase one lot which comprises of 250 shares. It means if you need to apply for the IPO, then you need to shell out rupees 15,000 per lot. So if you want to buy one lot, you need to pay 15,000. If you want 2 lots, then you need to invest 30,000 and likewise. Investors can apply for Burger King IPO between 2nd December 2020 to 5th December 2020. Do you know what QSR stands for? Well, QSR stands for Quick Service Restaurant. It includes companies like Domino's Pizza, McDonald's, Burger King, Pizza Hut, Subway, etc. The first point in the future growth prospect of QSR market is its increasing availability of retail space. There is a growing trend to increase the presence of food service outlet in highways, metro stations, railway stations, airport, etc. Especially the highways have seen tremendous growth in terms of infrastructure. This has resulted in increased penetration of food and service outlets in various strategic locations. Next key trend is increasing eating out and ordering in behavior. There's a growing trend in the urban cities in India across all economic class to eat out. This trend is not just based on the special occasion, but rather as a part of their shopping experience and leisure outing. Next key trend is growth of online food delivery. Due to factors like busy lifestyle, increasing disposable income, growing usage of smartphone and internet penetration, the online food delivery market has increased at a rapid rate. This is helping drive more growth for QSR segment. Next key trend is India-centric approach. Big international brands like Domino's, Pizza Hut, McDonald's, Burger King, they have all incorporated in their menus a large list of products that caters to the taste bud of Indian audience. Next key trend is premiumization. Today, many people prefer brands like Domino's, McDonald's, Burger King just because of their premium and differentiated product offering. And this trend is going to increase in the future. Overall, looking at various aspects, I think the QSR market in India has got a bright future. QSR market in India is highly competitive. Burger King competes with companies like Domino's Pizza, Pizza Hut, McDonald's, Subway, etc. If you look at the QSR market in India, you can see the market share by outlet count and market share by revenue. Domino's has got 19% of the market share in terms of outlet count and 21% market share in terms of revenue. It is followed with Subway, which has got 8% of market share by outlet count and 6% of market share by revenue count. It is followed with McDonald's, which has got 7% share by outlet count and 11% share by revenue. And then you have got KFC, and Burger King has got 4% of market share by outlet count and 5% of market share by revenue, and rest 56% of market share is by others and 48% of revenue is from others. For Burger King to sustain, it has to continuously innovate and launch new products catering to the taste preference of Indian consumers. Both price and quality are going to play a crucial role in terms of driving growth for Burger King India. As an investor, it is very important to look at the financials of the company before investing. So let's have a look at the financials of Burger King India. If you look at the revenue growth of the company between March 18 till March 20 in the 3 years, the revenue has grown from 388 crore to 846 crore. So there's a consistent increase in the revenues of the company for the last 3 years. The revenue growth of the company has been great. In the last 3 years, the revenue of the company has grown at a CAGR of 29.3%. Let's have a look at the operating profit. If you look at the operating profit, it has also grown consistently over the last 3 years. The operating profit has grown from level of 30.4 crore to level of 112.7 crore by March 2020. So in the last 3 years, the operating profit has grown consistently. In terms of CAGR growth, the operating profit of the company in last 3 years has grown at a rate of 55%, which is just phenomenal. If you look at the profits of the company, it is consistently in loss for the last 3 years. In March 18, the loss was 81 crore, then in March 19, the loss was 38 crore, and in March 20, the loss was 77 crore. So the net profit of the company is consistently negative for the last 3 years, and that's where I have a problem. If you break down the reason for negative profit, there are basically two reasons. The first reason is the company is investing a lot of money in the growth and opening new stores. And the second reason is company has got a lot of debt, and hence it has to pay a lot of interest to the borrowers, which is eating a lot of profit of the company. Let's have a look at the debt to equity ratio. If you look at the debt to equity ratio of the company in the last 3 years, it has grown at a very fast rate. You can see that in March 18, the debt to equity was 1.54, then it rose to 2.69, and in March 20, the debt to equity ratio is 3.35. For a company to have financial stability, a low debt to equity ratio is very important. A ratio of less than 1 is generally preferable. But the debt to equity ratio of Burger King India is above 3, which is an alarming situation. If you look at the return on equity of Burger King, you can see that it has been consistently negative. The March 18 number is minus 28%, March 19 is minus 15%, and March 20 is minus 28%. If you look at the net cash flow of the company, you can see that the March 18 number is minus 5.1 crore. It means the company has been cash negative in March 18. Then in March 19 it became 8.6, and currently in March 20 the numbers are minus 11.8 crore. So the company has got various day-to-day expenses and it has to grow and it needs cash. But due to its high borrowing and high investment, it is actually in loss. And this is one of the major reasons why the company is launching its IPO. So the company has got two ways to raise money. The first way is via borrowing money from investors, and the company has already taken a lot of debt. Now when you take a lot of debt, you need to pay a lot of interest, and that interest eats up your profit. And the second way is to launch an IPO, and that's what precisely Burger King India is doing. The company has launched an IPO of 810 crore, out of which 450 would be invested in the company and rest of the 350 crore would be given to the promoters. In the short term, COVID-19 has got a significant impact in the performance of Burger King India. As a result, the revenue of the company has fell down to 151 crore in first and second quarter of FY 2021 as compared to 425 crore revenue in Q1 and Q2 of last year. The losses have also widened to 121 crore in Q1 and Q2 of current year as compared to 17 crore in Q1 and Q2 of last year. The debt to equity ratio has increased from 3.35 in March 2020 to 4.38 in September 2020. Considering the COVID is not yet over and there are still increasing number of cases, it is going to significantly impact the growth prospect of Burger King India. If you look at the long-term growth prospect, the key part of Burger King India's strategy is to increase its presence and grow at a rapid rate. As per the master franchisee agreement, company has to open minimum of 700 restaurants in India by December 31st, 2026. And currently, it has got around 268 restaurants. So there is a long way to reach from 268 to 700 in just 6 years. Now the company has to identify suitable location to fuel its growth, and it is not an easy task. This is because company also has to maintain the profitability. So far in the last 3 years, company has been consistently making losses and it cannot sustain the losses for a long term. So the company on the one side has to grow and on the other side has to increase its profitability and cover up its losses. And this is not going to be an easy task. For example, if company has to open new restaurant in area where it has got little or no operational expertise or there is very low brand awareness, then it has to spend a lot of money to increase the brand awareness. Or if company opens new restaurant in the same area where it has already got restaurant, then it will result in cannibalization. It means the new restaurant are going to eat the profit of already established restaurants, and that is not a good sign for the company. Well, there are two aspects of investing. First is short-term investing and the second is long-term investing. If you are a short-term investor, then your focus is mainly to book profit on the listing gain. And if you are a long-term investor, then your focus would be to invest for the long term. If you are a short-term investor and willing to invest in Burger King India, then you need to look at 3 criteria. The first criteria is the grey market premium. Grey market is the unofficial market where the IPO applications or the shares are bought and sold before they officially become available for trading in the stock exchange. As per the news from Economic Times, the grey market premium of Burger King India is 56%. Next, you need to look at the recommendations from various security houses like your ICICI Direct, Angel Broking, Motilal Oswal, etc. Whether they are suggesting investment in the IPO or not. If you have got more recommendation to invest from these security houses, then you can consider investing. This information you will get mainly during the 3 days between 2nd to 5th December. Finally, you need to check the subscription status. It basically suggests how many people have applied for the IPO. So if there is more subscription, it means there is more demand than the supply. And generally when you have got more subscription, then there are chances that the company is going to launch at a listing premium. Again, this information would be available between 2nd December to 3rd December. Now if you are thinking of investing in Burger King India for the long-term perspective, then you need to look at the fundamentals of the company. If you look at the financials of the company, it has been making losses consistently for the last 3 years. The debt of the company has been at alarming high level. Company's cash prospect is also very bad. So overall, looking at the growth prospect, yes, there are chances of growth, but not at a cost of profitability. And hence, looking at the poor financials of the company, I would not be interested in investing in Burger King India for the long-term perspective, at least for now. So in this video, we discussed about the IPO of Burger King India. Do you think it is worth investing in Burger King India IPO? Do share your thought in the comment box. Also, let me know what company you want me to analyze in the future.